Welcome back to Income Trading 101. Today is Thursday, May the 6th, 2021. And I wanted to take a look at Chipotle Mexican Grill, which has a very high beta to the S&P 500. But that being said, I wanted to get a good sense of where it is and where it's been. Let's just pull this pricing. Actually, we'll get rid of that volume. We're going to pull this. I want to get as much data in here. Didn't mean to move the graph. Get as much data crammed in just so we confirm we are at still, even though so we're pre-market right now, but we are very much at all-time highs in Chipotle, much like the regular market. And this has had a strong rebound since the pandemic dropped in 2020. It had a full recovery and has then doubled in price. I mean, it's amazing. I guess when people, started wearing masks and getting back out, they just couldn't wait to get their hands on those lovely overstuffed burritos. But that being said, let's see if we can find some overstuffed profit opportunities in the stock. So I'm going to take this back to roughly a year. In fact, I'll just go ahead and get this full rebound, the full recovery period that started back in late March of 2020 up until now. Move this over too, it's fine. Stretch it out a little. There we go, a little better view. So we're going to start off with the moving average like we always do. And I love having this as sort of my base analysis. There's a lot that can be seen with moving averages, and in terms of technical analysis, when you're looking for, you're looking at the past for some indication of what may happen in the future. To me, simple moving averages are one of my go-tos. And I had the question recently, do I prefer simple moving averages or exponential? The MACD that we're going to use next, the MACD indicator, does use an exponential moving average. So that's part of that analysis, but I prefer simple moving averages when it comes to just my my sort of quick daily view of these stocks and any other asset, crypto or commodities, whatever. I like starting here. So you can tell when we're in an upward trend that the green, the 10 is higher than the 20 and higher than the 60 day. And we see that happening. Obviously, some pullbacks, some crossovers and whatnot. You can also see how far back in May, how far away from the 60-day price was. I mean, that was a strong rally, strong rally. And then, of course, you look at now, and right now we have a bit of convergence because the 10-day is approaching the 60 and the 20 is higher. So it appears that a more bearish pullback is occurring, but because these are all of the trends are out of order, the moving averages are out of order. I probably would wait, at least using a daily, to trade this. Let's take a look at the hourly. So in the hourly, we already had the crossover, and all three moving averages are actually in line, showing that they are actually in a downward trend. So hourly is a downward trend. A 30-minute should also be a downward trend. The 10 is below the 20, and both are below the 60. So and at the 30, you can see how much distance, how much space there is between current price and the 60 as well, which I think is much better. I don't like trading periods like we had back here in late April where all three moving averages are so close. I like to see some separation and ideally the continuation of a downward or upward trend for that matter, with some distance from the 60-day price points. Let's take a look at the 15-minute to see if that's also going to be... all right, so at the 15-minute level, we'll use the actual numbers. The 10 is above the 20, and both are below the 60. So Definitely some sort of convergence going on at the 15-minute level. So if you were to look at the downward trend in this, you would probably look to enter using a 30-minute and manage it using the 1 hour if you were expecting the downward trend to extend itself. And it's very tricky right now with markets being so high, because I always like to trade on the side of strength, and it's hard to ignore the fact that the strength has truly been to the upside, even in this view of this sort of compressed view of the dailies. You can just see the upward movement, higher highs and higher lows. However, we do seem to have sort of found some resistance at this current high level. We kind of have two tops, and we've come off from there. And last time we came off all the way down to roughly $12.57. I'm sorry, $1,257, not $12. $1,257, which would be another, we'll call it another 150, $160 lower than where we currently are, actually 170. So let's go ahead and we'll pull this back on out and get rid of the moving averages and just take a look at the MACD and see if that's giving us any indications, most likely on the shorter time frames. So we do have on the daily a nice pullback or crossover in positive territory, and that has also the blue line, the MACD line, has gone from positive to negative. Once this signal line goes negative, I am a fan of shorting, but however, don't ignore the fact that this has been an upward trend. So trading any of these short-term pullbacks actually would have they would have needed to be really short trades, because the market has pulled higher, right? And as long as the market is pulling higher, these pullbacks are nothing more than retracements before the market continues on its previous trend. Now, I don't know if we're going to make another new high. That's the challenge of trading at new highs, but definitely I'm much more leery of shorting this market right here. But what I do like is that both the signal line and the MACD line head negative, then we might get another nice crossover in negative territory, which would be a buy signal. And I prefer buying in this scenario than selling. Let's look at the 1 hour. So the 1 hour did have a nice crossover a couple days ago, and both the MACD and the signal line are below. They're both in negative territory. So if that MACD crosses the signal line like it did back here on the 27th, 26th of April, and we had a signal line, we had a crossover, and it went positive. Like if it does that again, that'll be a good indication of a buying signal for this stock. And right now, we've already got that happening in the 30-minute level. So you have a crossover in negative territory that happened yesterday, and now we are pulling higher. I'd like to see us pull quickly into positive territory, and that'd be a great indication of a buy. And I'm betting with the 15-minute, we're almost there. So lots of conflicting periods. If you remember in the moving averages, you had the 1 hour and the 30-minute both were showing more of a bearish downward trend in the moving averages, but the 15-minute was starting to show that it might be heading higher. It was in a period of convergence. We're definitely getting that sense in the moving in the MACD as well. So let's just take another look then. Let's take a closer look at this stock in general and see if there are any levels to be aware of. So I'm just going to start drawing. I'm going to draw a line first off right around where we are right now to see if that has played a period of support. And I don't, given that we have so many periods dropping below this period, I don't think this has really paid played well as support. There sort of is the resistance that's come into play with regards to the highs in the market. We do have individual candlesticks have gone above it, but price has not closed higher than that. So we could be in a period of resistance and pullback, and then it's also, I think it's also of value to just look at, this stock has really had a great upward trend, like so many so many other companies we've seen this year. I mean, it's had amazing periods of rally, and right now we just, maybe we're in a bit of a sideways channel. You could look at it as a sideways channel. We could also, I'll show you a couple of ways to look at this. So you've got possibly a sideways channel going there, or you could also say, well, maybe, just maybe, we are going to be seeing, another price increase. Much like each of these pullbacks led to a higher price, and honestly a bit of a different slope for the next period. So very challenging stock to trade. The last thing I want to show you is how this looks relative to the S&P. And I shouldn't say it's a challenging stock to trade. It's just challenging to trade at all-time highs. The question is, do you buy this in hopes? Do you buy it at 1426, hoping to hold it to 1560 and beyond? It's nice, $140 so profit, or do you expect this to go lower and retest these lower boundaries? It's always a challenge. Let's see. Wanted to take a look at the S&P. We'll do just we'll do it versus the spiders is fine. So when we look, this is why I say this has a relatively high beta to the S&P 500. Here we go. You can kind of put them right on top of each other and get a sense of, pullbacks, higher highs, pullbacks. Although clearly they're not one-to-one correlated, because Chipotle seems to have, some stronger pullbacks and also stronger rallies as it's going, this pullback and then into another rally. So definitely has a beta, a high beta, but not one-to-one. It's doing its own thing. This pullback right now is, I think, significantly more than what we've seen in the S&P. But, Chipotle's got to be its own company. It's got to be its own man. So that's it for today's analysis. Overall, clearly the strength in this is to the upside, but we definitely have had a strong pullback that you can't ignore. And the question is going to be whether or not this is simply a slight retracement, or if we're getting a new creation of a downward trend in Chipotle. And until we really break through some of these previous levels, like I love that this pre-market line right now just shows you, back in December that was a high, and how relevant to price history this current price level is. So maybe we bounce off of it and end up seeing it as support, or we blow through it and it becomes the new resistance, expecting stock to go lower. So that's it. I hope you guys have a great day, and as always, happy trading.